Good evening, all. Ira Epstein of Linn and Associates with your SPDR ETF wrap-up for this Tuesday, and we are at the 4th of August, 2020, a little later than normal. I'm having the whole area I live in, and I live in one of the better areas of Chicago, near the Board of Trade, by the way. I can walk to work when it's open, and I think August 13th, the floor is finally reopened for one of the groups of trading. But I think they're doing massive rewiring, the 5G and everything else they're doing in my neighborhood. I keep getting knocked out during the day, so I go to hotspots on my mobile. I know how to do that. My fees have gone through the roof. I am hoping that since it's Xfinity's fault, that Xfinity will pick that up. I can prove that I only use it for business when I'm there, and that's what I'm doing. All right, that's also why I didn't put out a morning subscriber, my morning flash update. I couldn't get it done. I could record, my studio's fine, I can't get it posted. They're a little different. They stopped work at about 5 o'clock tonight Central Time, and that's why I'm here. I can post again. All right, I saw right at maybe 30 minutes ago, the PBS Newswire, and I saw Nancy Pelosi's interview. And I must tell you that she's got a chip on her shoulder in the sense that President Trump had given a tax break that impacted the top 1% of wage earners, gave them, according to her, $2 billion. The lower income people got nothing out of it. I can't argue that, okay? It certainly favored the higher earners. They drove the economy. But her argument now, and I'm not saying which side's right and wrong, I refuse to do that. Her argument in this interview, and that's what I was watching, is that now that COVID has decimated the lower income earners, they need that money and they're entitled to $3 billion worth of these entitlements. How far the two get together is going to be the issue. Throw out the payroll tax. The president can do that without anybody in Congress. He can extend that, give you a holiday to year end. He can stop, in certain cases, evictions. He's got presidential authority on that. It's the rest that is there. I like what she said. She believes that next week, not this week, when all the paperwork and everybody sees where the I's are dotted, the T's, that there will be that money. I wrote in my newsletter that before the next check is due, those checks will keep coming. We'll see if I'm right or wrong. The stock market's running on that, but the gold and the silver markets right here are running away on that. They are looking at it and saying, okay, if you look at real interest rates, let's go to the 10-year note. It's 0.517, I saw it at the end of the day. New historic low close. It's been I think 3.4 or something intraday when we had the crash in March, but that's a different story. This is a closing basis. For a 0.5 percentage point for a year, people are running to the metal markets and saying, when you throw in inflation, it's a negative rate. I'd rather own gold. That's what they seem to be doing. Let's go to the chart action. In the tech stocks, you have to recognize that what's going on is nothing short of a technological revolution. We heard of the Industrial Revolution. COVID-19 set the tech stocks up in a way that nobody could even dream of something like this happening. And now they're being embraced because that is the future and it's not going to go away. It's going to get better. I don't care who buys TikTok. There'll be a competitor that comes along. The best survive. The others fight to get their place. If you're on Google and you got the 20th position, you don't get that many hits as the guy in the first position, right? Well, if you're a Microsoft, no matter what the other company is, that's their operating system. But an Apple phone, Apple's now the richest company in the world with the stock as it's running. Tesla, the best, it's bigger than GM, it's bigger than Ford. Those two, I think, combined gives you an idea what the market has embraced. Doesn't mean the market is right. It's what the market has embraced. It has embraced this. We have a gap in this chart. Is it going to turn into a gap higher again? Could be a breakaway, then a runaway gap. Be on the lookout for that. That's a powerful signal. Or is the market going to fall back and try to fill the gap into this 110 area? Right now, it just looks bullish. The market's over the 18-day average. That is bullish. Where's the resistance? Well, you climbed over the upper Bollinger Band yesterday, and you're staying over it today. But there's something else here. If we look at yesterday, we finished at 113.15 with a high of 113.51. Today's high did not take that out, but you closed in the top quadrant and higher. Is that a breakout? I don't know. Normally the breakouts happen with a higher high in the top quadrant close, higher high, top quadrant, one higher than the other. This is unusual. I don't know. I'm going to have to go back and study it, but it's to me it's a bullish event. Momentum pointing up. Now, when you come out of sideways action, I wish I had moved my cursor, but that's another story. That's my fault. You're sideways, and you're just drifting along here. When you eventually break out of sideways action, if it's to the upside, inevitably you get overbought. If it's to the downside, you're going to get inevitably to the oversold area. So this doesn't bother me. The question is it going to embed? And it's nowhere near it. It is simply an overbought market where the odds favor it's going to move back to the right-hand side of the Bollinger Band. The question is, does it want to fill a gap, or is it going to try to gap up even more and catch another group of traders? Because everybody under it that is in a short position is wrong, because these are new highs for the move. You've got the same in SMH, higher highs, higher lows, no gap here. Just running on that band, not letting go of it with the embedded reading. That tells me on pullbacks, this market's going to be well bought. It will dump that if the red line closes under 20. To me, that's the risk in the market, not any other part of it. It's based on momentum. On the industrial side, you lost that momentum. This is what happens when you lose an embedded reading. So there's your embedded reading with both the red and the blue numbers staying over 80, going sideways for days. When you lose it, prices often make a run at the 18-day average of closes. And with that, the market is reverted to being an overbought market. It's got to work that off, which means on rallies, to work off an overbought market, there's generally selling pressure. And that's pretty much what's been happening. Where's the resistance in the market? It's right at the 200-day average. Are the pros short? I don't think so. Why? Because you're staying over the 18-day average, and that means the bias is up. So this is a correction move, not a trend move. Even though the swing line is down, it's countered by the market closing over that number. In the energy sector, sideways pipe action. This is called a pipe. Learn what a pipe is. Think of a pipe this way. The spring is price, and it's winding in there, and it gets tighter and tighter as the pipe narrows even further. Eventually it breaks out. What happens is the spring's made out of a metal that can't break. The pipe can break. It's made out of a metal that'll give way. You break out to the upside or downside. The longer you stay in the pipe, the bigger the ultimate breakout. So it's either a base or a top. That's the simplest way to look at it, but you see it so much better with Bollinger Bands. QQQ, overbought, uptrend into the upper Bollinger Band and just riding it. I'm not looking for it to just jump away and run away. I expect it to ride it. Overbought is a problem. That does not mean you can't get corrections. You can. Do pros buy overbought markets? Typically not. They don't sell them. There's no reason to be short, but I question if there's reasons to be a buyer there. In the emerging market, they need a lower dollar. A higher dollar hurts these markets, and they're getting it again. The market's in a pipe, not as well defined as we can get over here, but it is in a form of one. You see that right through there. So we know the resistance, the support area, neutral area, no trend. That's typical. Gold, a runaway with the embedded reading. It's not even backing off. It just keeps moving to the upside. As long as it does that and keeps this, you can just keep tracking higher. And that's what it seems to be doing. Now it's going to have a gravitational pull on the gold miners. Why? Because the assets in the ground are worth more money. Each time that gold adds another $25, $10, their assets worth more money. I don't care if they're mining it, they have the right to mine it. That's value. Whatever they're mining is worth more money. So that's there. So those are the fundamentals. The chart action? No, it's not a buy. It is a bull market. You're staying over the 18-day average of closes, and you've reasserted the market with a pattern that you had right here of lower highs, lower low. You changed it when you got over this 43. Now you've got it back to a bull pattern. The target's 45.33, but it is overbought. And as a technician, if it's overbought, you don't say, well, I'm not going to pay attention to it this time. You do that. I won't. TLT, As I said, embedded reading, bullish as can be. The market keeps staying bullish, stays over the 18-day average, keeps going to the upper Bollinger Band, backs away. It's a classic bull market. And until you lose that embedded reading, I think it stays that way. FXE. So in this particular market, you have not lost the embedded reading. You did in the futures. You didn't here. So this is still bullish. And until you lose that, I think you're not you, but I think the pros are a buyer on the breaks, and they'll bail if you lose the embedded reading. Don't lose it. I think they're targeting 112.50, and I do think they're buying on this break right now. Now, what I try to do for you from time to time is bring you information. In the mornings, what I do is I make a recording at 5:40 in the morning for my futures traders, and in the evening at about 4 o'clock in the afternoon, I'm recording or have recorded a SPDR ETF video for the next day. I'm going to cover in it about 35, 36 charts, specific buy here, sell there. Here's what I think you do, not what I think the pros are doing. Here's your stop. Here's your exact objective on the market. It's about the price of a Starbucks. It's a little more, not much. $8.95 for 30 days, but a lot more pleasure. You got 30 days of what I have. Buy their, what do they call it, the Venti, whatever their largest drink is. It's too expensive for me, so I'll let you drink it. But it's not that much difference between that price and what I'm giving you for 30 days. You get 30 days of this. When you put it that way, ask yourself why you're not trying what I'm saying. Go to www.iraepstein.com under the word research. We hope you do that. I'm Ira. You have a good day. I'll see you tomorrow.